Okay, you guys, this is chapter 13. This is page 327 of the workbook. It's chapter 13, and we're recording payroll taxes. Now, unless you're a mind reader, you're not going to be able to do this without having your book open to 372. So here's the page in the book that you're looking at, and it's Work Together 13.1, and this is all from the employer's point of view. So we're looking at this as if we are the employer. We see the total earnings of our employees are $12,600. Here's the federal tax withheld, the Social Security tax withheld, and the Medicare tax withheld. And so a couple of things that you need to know, and you're on page 327 of your workbook, is that your salary expense is your total gross pay. So your salary expense, please write these notes down, is your total gross pay. And the total gross pay is the total pay before any taxes are taken out. Then your cash is going to be your net pay. It's going to be your pay after taxes and deductions have been removed. So cash is your net pay after all taxes and deductions have been removed. So make sure you write that down. And then the employee income tax is the federal tax. And the reason I think that they call it employee income tax is it's paid by all employees in all 50 states. So employee income tax is just the federal tax. So federal tax is paid by everybody in all 50 states unless they were low income or something. So that's probably why they call it employee income tax and not federal income tax payable, but that is the federal income tax. Now, let's think about some of these accounts. Salary expense we know is our gross pay. We know salary expense is classified as an expense, and we know that salary expense has a normal debit balance. And we know expenses are always debited. So an account increases on its normal balance side, it decreases on the side opposite its normal balance. Employee income tax payable. The key word is payable. These are all liabilities. And we are incurring a liability. The liability is going up. These liabilities are on the right-hand side of the accounting equation. They have a normal credit balance. And an account increases on its normal balance side, it decreases on the side opposite. So all of these payables are liabilities. So write that in. We haven't dealt with liabilities in a while, and remember that when we incur a liability, our liability is going up. Now cash is an asset and it has a normal debit balance. An account increases on its normal balance side, it decreases on the side opposite its normal balance. What's happening in this problem is that we're actually going to pay our payroll. So we've got to show that we have a salary expense for the gross pay, then the taxes are going to be taken out, and our cash is going to be for the net pay. So let's give it a try. When you look in your book, it tells you that the total earnings are $12,600. That $12,600, and this is page 372, just if you're wondering. That's our gross pay. These are our different taxes that are withheld. So you guys are going to need to be looking at page 372 in your book, or this problem's going to be pretty hard to finish. So as we're looking at this, our gross pay, total earnings, $12,600. That's our gross pay, that's our salary expense. The different taxes. The federal tax is $1,186. That's a tax we owe. We're showing we owe it. We have not paid it yet. That tax is going up. It's a liability that's increasing. Social Security held out was $781.20. And the Medicare that was held out was $182.70. So if we take our gross pay minus our taxes, we're going to get the cash that we're going to pay out. And we're going to pay the cash out to our employees, so we're going to credit cash. So what we have to do is find our calculators, and we've got to take our gross pay minus all of these taxes. So we'll add the taxes up together. The taxes come to 1186 plus 781.2 plus 182.7. So the total taxes are $214,990. So we're going to take our gross pay, $12,600, minus the total taxes. Hopefully I added that right. $214,990. And let's see what we get. I'm going to add up those taxes again just to make sure I was right, verify that. So that was right, the $214,990. So subtract that taxes from the gross pay. 12,600 minus 2,149.9, and I get 10,450 and 10 cents. So that's going to be the amount of the cash that I'm paying out. The gross pay minus our taxes is our net pay. Okay, you have never used a special journal before. So you go down here and you're in the special journals. It's a cash payment journal. It has a special column for cash. So when we credit cash, we don't have to write cash in the journal. We're just going to use the cash credit column. So how do we journalize this? Well, we have, it's July 15th, tells you that in the book. It's 2014. And we have a salary expense. Salary expense is going to be debited for the gross pay. So that's our gross pay, which is our total pay before taxes. So debit your salary expense for $12,600. Hopefully you guys are using pencil and not pen, so it's easier to erase if you made a mistake. Then the employee income tax payable, which is the federal income tax paid by every employee in all states. And remember that we're incurring this liability. We are not paying it off. We're showing that we're actually taking it on, $1,186. So you're crediting it. That liability is going up. Our Social Security tax payable is also getting credited to show, yes, this is indeed a liability that we're taking on right now. We are not paying it yet. We're just showing that we have it. And then our Medicare tax payable was for $182.70. So when we take our gross pay minus our taxes, and if you guys can't see this very well, look at your numbers in the book, because this is all in the book. and you're looking in the book on page 372. But we're taking our gross pay minus the taxes. And when we do that, we're going to get our cash credit of $10,450.10. So what we have just done here is we just recorded that, yeah, we are going to pay our payroll. We have to journalize it, and when we actually journalize it, in chapter 12 we were planning it out. Now we're going to actually journalize it. So our total salary expense for all our employees was the $12,600. Here are the different taxes that we're paying: the federal tax called employee income tax payable, Social Security, and Medicare. So we take our gross pay minus our 3 taxes, and that gives us the net pay of $10,450.10. So hopefully that makes sense to you. Stop and pause this, and you can replay it if you need to, and then let me know when you see me if you have questions. Good luck on this problem. Thanks, you guys.